What's going on, Trade Pros? This is Mark from Trade Pro Academy, and in this weekend's video, I'm gonna do a quick intro video to the heat map, how to navigate the heat map, what it means, and how you can use it as a trader to help build that edge. Now, if you haven't subscribed to the channel, you're gonna wanna do that and to check off the notification bell. We'll give you guys the intro slide to do that, and we'll see you shortly.
Alright, Trade Pro, so what you guys see in front of you is my Sierra chart platform. Namely, what I want to get your attention to is the depth of market here on the left hand side, and of course the star of our show today, which is the inventory heat map. So before I can kind of explain what these numbers represent, why they're displayed there, and why they're important to us as order flow traders, I think it's important to discuss first and foremost what inventory is, what it actually represents, before we can kind of go into the nitty-gritty of the heat map. So first and foremost, what is inventory? Well, if you look at this DOM here, you'll notice that at every single price level, you have got offers and you have got bids. All right, and so on the right hand side, on the sell side, this is also considered offers. These are traders that are looking to sell. They have the intention to sell at certain levels. All right, and the number here next to this price level represents the actual inventory at that price. So in this case here at this 35.18 evens, you'll see that there are 106 contracts, or rather 106 offers at 35.18. And you can see down here that the price at the time that I kind of paused this replay, the price was down here, which means that these offers are above the current market price. And so what that means is that we've got about 106 contracts looking to sell if the market trades back up to the 35.18s. Now, if you look on the buy side, the bid column, this is the left hand side here, you will see the same thing. These are the intention of buyers. So let's pick a random level here. Let's take the 35.12 3/4. You'll see that we've got 81 contracts sitting here on the bid. So once you kind of identify what inventory is, why is it important? Well, inventory is important because the market moves to and through liquidity. And so when you see the DOM and you see higher than average inventory at certain price levels, those tend to act as magnets for the market to reach towards. All right. And so if you're looking at this DOM at the moment in time, you'll note that on average, there's not too much as far as inventory on any single level. You'll notice the average is somewhere in the neighborhood of, let's say, 50 to maybe 60 contracts. All right. But at the same time, look at some of these levels here where we've got a larger cluster of bids. And to the right hand side, we've got a relatively larger cluster of offers. And so these levels become key areas of interest for us as traders because, like we said, markets move to and through liquidity. So we like to look for levels that have higher than average inventory, and that is effectively what gets displayed on our heat map. So you'll see here on the heat map at this moment in time that there are 310 contracts sitting at the 35.20 level, and the largest level of bids are those 153 contracts here sitting at those 35.11 quarters. So if I just scroll up a little bit here, there we go. You can see that the big offer here, 310 at 35.20s, that's the largest offer that we see on the DOM in and around this price range. All right, the largest bid inventory right now is 153 at these 35.11 quarters, and that's effectively what we're seeing on this heat map. All right, and so what the heat map does is it effectively filters out all of the noise and it only displays these large inventory levels. And what we like to do with this heat map is we like to track the changes of supply and demand during this real-time auction, right? The markets are a real-time auction. And by identifying shifts or changes in supply and demand, that can help us spot potential trading opportunities. All right. And so that is effectively what the heat maps are for. So now that you guys know where the information comes from and what it actually means, let me expand this heat map here and show you guys how these levels tend to act as magnets. So what you guys see in front of you is a nice and clean example, effectively showing you how these levels tend to act as magnets. If I expand this price chart here, what you'll see is that there was a relatively large level of offers sitting up around these 35.20s, right? And so as the market was kind of trading lower, we caught a bit of a reversal off these lows, and you can see that there was some bids starting to show up with this blue shading here. And as the market traded higher, these bids kind of followed them, all right, which is showing you, bids are supporting higher prices. The interesting thing to note rather is that that big price magnet that was there for quite a while. And you'll note that, we tried it here, we've pulled out from the highs, broke out above those prior swing highs again, pulled all the way back, and these offers stayed on the DOM the whole time. And so this is what we mean with these offers are big levels of liquidity, and they tend to act as magnets. Because look at what happened when the market actually traded into that level. Right? We traded into that level when you also had bids move up aggressively. We tried it twice, little double top failure, and then the market traded right through those bids. Those bids pulled and it continued lower. Where to that next level of bid inventory. All right, that's what it looks like here on the price chart with the heat map overlaid. And this is what it looks like on the actual heat map. All right, so you will see that there was a good number of sell inventory up here. It wasn't shaded very lightly green, but you can, or rather very light red, but you can see that as the market kind of traded towards that level, the sell offers here actually increased, which is a sign that, there's likely going to be a wall at that level. As the market's trading towards it, if the inventory at this level is increasing, that's generally a sign that we might actually see somewhat of a reversal from that level. And so you can see as I kind of click on to the right here that we had some of those bids step up into the 310s, and then they pulled. Some more stack of bids showed up at those 09 halves. They pulled again, and then we saw more bids coming in through. And you'll notice again that we really, really like the lightly shaded colors because these ones mean the most to us. They're the levels with the most inventory, and so they're the ones that tend to act as magnets. So you can see here as we pulled off from that level, we didn't quite get in there. We got as high as we'll call it the 17 quarters maybe, pulled all the way back to these 11s, started to find some rotations around that level, and inevitably, as a magnet would, the market starts to trade closer and closer towards that level until it eventually, bam, there you go, eventually these guys pull and you've got all of these bids rush in from these 11s all the way up into these 18s. All right, and so when you get a level like that followed by bids showing up, and then you can see as we move on to the right, these bids pull. All right, you don't see any more displaying on the right side of this chart. That means that they pulled, right? When you get a pull like that with offers showing up again, then it's generally a sign that we're going to see a reversal. All right, and so that is a quick primer on the heat map trading for beginners. This is the heat map chart. If you guys would like to see some examples of how we use this in the real time, please drop a comment below.
All right, Trade Pro. So I hope you guys enjoyed that introduction to the heat map. It's one of our favorite order flow tools and really helps us stay on the right side of the market. If you guys enjoyed it, please make sure to smash that like button. Drop down some comments below to let us know what you want to see from us next. Until next time, good luck and good trading. Take care.
Hello, and thank you for watching this video. I want to take a moment to invite you to an exclusive online trading masterclass. In this event, you're going to learn 3 key things to help take your trading to the next level. Number 1, we're going to teach you a complete price action strategy used by professional traders on a daily basis, plus give you the checklist so you know how to check off each step to qualify the opportunities. Number 2, we're going to teach you how to use advanced order flow analytics to help you qualify high probability, low risk trade setups on a daily basis. Plus, we're going to teach you how to use that order flow to disqualify the trades that you're used to taking that end up being stopped out. Number 3, we're going to show you how you could apply all of this information with a small account, because you could start small and scale up. In fact, that's the only way to start, and a lot of our traders are doing it in our community on a daily basis. This is an exclusive offer you could get online only at this event. I look forward to seeing you at this masterclass and teaching you these 3 secrets of highly profitable day trading. Take care and have a great day.